With cryptocurrency being so extremely volatile, what should investors be doing to manage their risk? I mean, if there's one word that describes Bitcoin and cryptocurrency, we know it's volatility and how volatile it is. And crypto prices soar and then seem to crash almost as quickly. And even seemingly reliable stable coins this year have actually plunged as well. So this adds some real fuel to the fire of the Treasury Department, who's citing the risks that cryptocurrencies could cause to the broader economy and calling for heavier regulation of those cryptocurrencies because of that. Now, that volatility attracts traders who are looking to make a profit, but it can also be especially nerve-wracking, especially to new investors who are just looking to get started. And traders can expect plenty more of this volatility in the future as new cryptocurrencies are emerging all the time and others are falling by the wayside. But there are some things that you can do to protect yourself. So today on Renegade News, I'm going to get into 5 of them. Welcome back to Renegade News. I'm your host, Glenn Kowalski. Every week on this channel, we discuss the latest news, strategies, and tactics for breaking free from the system, paying less tax, and living anywhere in the world that you want. So let's dive right into it. Here are the first 5 things that you should be doing when cryptocurrencies start to plummet like they're doing right now. The first one is to stay calm. Now, whether you sell your cryptocurrency at this time or you see the dip as an opportunity to buy more, you need to act with a really cool head. Making emotional decisions, especially when trading, rarely results in anything good happening. And I would go on to say it really never results in anything good happening. So before you rush into the market in this panic, you're going to want to reflect on why you're trading in crypto in the first place. Are you investing because you believe in long-term opportunity like I do? Or are you here to make a quick buck on short-term trading? Nothing wrong with that if that's what you're looking for. But the answers to those questions can help guide you towards the proper decision and the proper action. In either case, you're going to want to act in accordance with your own goals. In other words, if you believe in the long-term opportunity, think with that type of mindset. If you're here for a quick trade, then use that mindset instead. The next thing you have to do is really assess the situation unemotionally, like we said in the last step, but assess what's going on. Is there some kind of a news? Is there a price action going on? Or is the market acting on the whims of some type of a rumor? Is there news driving the trading price of Bitcoin and other cryptos? Is it possible that there's a fundamental news that's shifted the market sentiment and that it's not just a price action or a rumor that's driving that sentiment? In 2021, there was actual developments and news that hurt prices. For example, China's move to ban financial institutions providing crypto-related services. That was a further clampdown since the country had already banned crypto exchanges in 2017, but it hadn't prohibited individuals from actually owning the cryptocurrencies. Then in late 2021, the Federal Reserve decided to reduce liquidity in the financial system, and many cryptos have been on a significant downturn well into 2022. Now, one of the biggest events was in May 2022 when the stablecoin Terra USD plummeted as traders engaged in this old-fashioned bank run, essentially, and they started fearing that they didn't have the crypto assets to back its peg to the dollar. That news then spilled into other crypto markets as traders worried about that the selling would just start beginning more selling. So these moves have been further significant blows to the burgeoning market, which has been enjoying significant capital inflows during this time. The next thing is you always have to remember that volatility is the name of the game with cryptos, and it will continue to be for a very long time. Cryptocurrencies are just volatile in nature. They're brand new. And traders love this volatility since it gives them a chance to make money, whether it's going up or down. But that's a Wall Street game, and you have to know how to play it. Because crypto generates no cash flow, traders have to rely on changes in that sentiment to drive the prices. So that means that the market can swing between rabid optimism, as it did early in 2021, to a more pessimistic despair, as it did a few months later, and which we're currently living through right now. Then there was the news around the Coinbase IPO in 2021 that helped to drive positive sentiment to the crypto market, while the reduction in the monetary stimulus drove pessimism at the end of 2021 and at the start of 2022. So you have small and large news events that are driving huge market swings in either direction. So when you have this assets that's driven by the sentiment the way crypto is, the emotions of traders really propel the market. And that's true in the case of stocks as well. But stocks also have a business behind them, so they have this real stream of growing cash flows from the issuing company, and that can accelerate them higher in any type of market. Once again, it's this volatility that draws in professional traders who are using these high-powered algorithms to make very sophisticated trades. But that's something that mom and pop traders typically don't have the advantage of actually using, so they can get punished by those moves. By the way, if you're a smaller business or a small mom and pop, or you're brand new to cryptocurrency and you're interested in Bitcoin and cryptocurrency, but you don't know where to start, check out the first pinned comment. We have an action plan that'll take you from zero to buying, selling, and trading Bitcoin in just a few minutes, guaranteed. Anyway, after calming down and evaluating everything at this higher level, evaluate the future of the market. Is China's move to ban crypto a sign of things to come? Maybe. But other countries, including the United States, are exploring how to regulate cryptocurrency instead of prohibiting it outright. And that's going to drive the market forward. There are a couple of other countries like El Salvador and the Central African Republic that have even made it a legal tender. Now, of course, other major countries, how they proceed remains to be seen, but it's very clear that cryptocurrencies do face some real threats in the form of regulation. And that includes some regulations that could literally put them out of business. Although, in all honesty, I don't see how that's possible to completely put them out of business, but they could so damage the mainstream acceptance of them that they effectively become worthless in the real world. And as this cryptocurrency is gaining this traction, it does risk becoming a victim of its own success because of that. So you have to really sit back and analyze how the fundamental situation could play out for crypto, given all the new developments. Will the government get tougher on it? Will they actually encourage it or maybe help to employ a wider adoption of it? Will new regulations help rather than hinder the cryptocurrency market? Some people think that by regulating Bitcoin, that's going to improve its adoption and therefore drive the market higher. And what other things could drive the market? And finally, you have to decide how to act. After you're done cooling down and you've assessed the situation and what it means for the future and your opinion, you have to consider how you want to act. Are the risks really opportunities in disguise? If you see it that way, which I do, you may want to continue holding your position or use the dip in the price to invest in more. Or do you think that the risks are likely to persist or even grow worse in the future? If so, you might want to just take your losses now and stay out of the game in the future. Or maybe you think the situation's just too murky right now and you don't know what to do. And if it's tough to see that way ahead, you may consider splitting the difference, selling some of your position today, while still having the potential upside tomorrow. You may also consider moving some funds from Bitcoin and other coins into something like a stable coin that's a backed stable coin so that you have it available if the market dips and you can buy more at a lower price later. But whichever way you go, you're going to want an action plan that reflects your views on the potential risks and the opportunities of cryptocurrency. The bottom line, a plunge in the cryptocurrency market may have you feeling rattled. You're not alone. A lot of us, a ton of investors are feeling rattled right now in this market. Now, while Bitcoin, for one, has rallied back hard in the past following other major declines, there's really no guarantee that it's going to do it this time. I expect it will, but there's certainly no guarantee of that. So you have to use it as a wake-up call and reassess why you're involved in the market to begin with. You have to also look at what opportunities and risks that market presents. And you also have to look at what the alternatives are. Because I know, in my opinion, the alternatives don't look near as good as cryptocurrency does. But one way or the other, we are in for some really rocky seas over the next few years. There's inflation, recession on the horizon, further reductions of privacy and freedom are all on the menu. But some of us aren't scared. There's a movement of renegades who are dedicated to escaping this broken system, making more money, paying less tax, and living more independently than most people think is even possible. You can find more information about this movement in the description, and don't forget to subscribe to Renegade News right now for the latest in crypto, business, investing, lifestyle, and asset protection. And check out the video you see on the screen right now for our latest upload. I'm Glenn Kowalski from Renegade News, and I'll see you over there.